everybody. My name is James Faulkner and I'm here with Guy Anderson, manager of the Mercantile Investment Trust. Welcome to the show, Guy.
Good morning, thank you.
The Mercantile Investment Trust invests in what you refer to as tomorrow's market leaders, with a focus on medium and smaller companies outside the FTSE 100. Just give us a flavour of what you look for in prospective investments and the overall strategy of the trust.
Great. So the overall strategy is to deliver long-term capital growth from a diversified portfolio of UK listed mid and small caps. And those are exactly the companies that we think of as having the potential of being tomorrow's market leaders. So we're looking for businesses that are well-established businesses with strong market positions, but one that have substantial runways for further growth, and thus we can see them developing and becoming larger businesses in the future, and thus driving the shareholder returns.
Tell us about some of the portfolio constituents. Which are your top 5 holdings?
Sure. I mean, we have a pretty broad range of companies in the portfolio. So we have around 75 holdings today, and they cover a range of different sectors. So it's not focused on any one specific sector. Some of the largest sectors, just to give a bit of a flavor, include the industrial space, where we have a significant number of holdings, including, for example, Spirax-Sarco, which is one of our larger positions. The consumer services space, so that would include retail, travel and leisure, media companies. One of the good holdings there is Games Workshop, a long-standing position, another big holding in the portfolio, or Dunelm, which is the home furnishings retailer. And then one of the third sort of major area, or one of the major areas, is the financial space, and that will include a combination of specialist financial companies, specialist lenders, but also banks. So, for example, One Savings Bank, or OSB Group as it is now, is one of the large holdings. And then, of course, technology. Technology is perhaps only technically around 10% of the portfolio, but it is our largest overweight in the portfolio. So our positioning relative to the benchmark. And that will include a number of our top 10 holdings, including Computer Center and Softcat, which are 2 distributors of IT products and services. And that's been an area of particular focus for the portfolio, not just this year, in fact, but over the last few years. And it has been one of the good drivers of strong returns for the portfolio through that time.
And what about the breakdown in terms of the index weightings?
Sure. So the benchmark that we use to gauge our performance and to look for our investment opportunities is the FTSE All-Share, excluding the FTSE 100 and excluding investment trusts. So from a practical perspective, that is approximately 90% the FTSE 250, the mid-cap market, and then 10% the small-cap market. The portfolio itself doesn't restrict itself to being aligned to those weightings. And in fact, when we look at it today, we've got around just under 5% in the small-cap market, and actually around 80% in the FTSE 250 or equivalent, and then 15 to 16% or so in the FTSE 100, which are not companies that we actively buy, but they are holdings which are a function of the fact that we've held them when they're mid and small caps, and then because they've done well, they've moved up through the indices into the FTSE 100. So in a way, that's a sign that the strategy has been working.
Yeah. And how has the portfolio fared during the pandemic? Has COVID-19 led you in any way to sort of alter your investment strategy, do you think?
So I think that the core investment philosophy that we hold to is unchanged, and indeed the strategy, what we're looking for in businesses, hasn't changed. But we've absolutely had to adapt to the changing circumstances of the individual businesses, and we've definitely made some changes directly as a result of COVID. Both positive ones, so increasing positions in businesses that we think are actually in an environment where they're going to thrive, but also at times, of course, we've had to reassess investment cases. And where a pre-existing investment hypothesis has no longer been valid, we won't hesitate to remove that from the portfolio. I'd much rather recycle the capital into winning investments than hold on to losers. And that's something that I think we have a very good discipline on.
And that shows, doesn't it, in that the trust has a history stretching back over 130 years. So you stood the test of time, as it were. Just give us a bit of an insight into the benefits of the investment trust structure for Mercantile and how that differentiates Mercantile against maybe some of the open-ended peers in that space?
Yeah, great. So of course I'm biased because I manage an investment trust, but I really do think it's the best vehicle for investing in particular at this part of the market. So at the mid and small cap end of the market, which can be less liquid than the overall market. And of course, that feeds directly into an investment trust because an investment trust gives us permanent capital. So we're able to make genuinely long-term investment decisions because we know that that capital will be there, not just next year, but in 5 years and 10 years time. And I think that gives a huge advantage when we're thinking about the duration of our investments. So we don't need to worry about being able to potentially have to sell investments in order to fund redemptions or buy other holdings in order to invest new capital. So for me, I think that's first and foremost the greatest advantage. The second one, which I think is important too, is the ability to use gearing. So investment trusts can gear, and Mercantile, for example, issued a debenture back in 2000. So we have long dated money that we can use to gear up. And at the moment where we sit today, this morning, we're 9% geared, clearly demonstrating a positive view on the outlook.
And how does that?
And then third, if I could just say the third benefit, which I do think is important, particularly I think from potentially a retail investor perspective, is the fact that we have an independent board. So we have a board that is truly independent, that hold our feet to the fire, that challenge us on our decisions and on our investments, and so really are looking to get the best possible outcome for shareholders.
Just back to the gearing point, how does that sit in terms of the range? Is there a range set by the board?
Yes, yeah, that's a good question. So the investment trust can operate from anywhere from 90% invested, i.e. 10% net cash, up to 20% geared. So that gives us a fairly broad range. The reality is we have an operating range, which we agree at our board meetings. So that's where the board clearly set us the range, but that gives us still a fair amount of latitude so that we can move as and when we see the best opportunities.
And the trust has a strong focus on dividends, doesn't it? How has this aspect of the strategy fared during the pandemic? Because we've seen dividends being cut left, right, and centre, haven't we?
Yes, we have, and that's probably that's the next advantage of an investment trust that I could have mentioned, which is the ability to smooth dividends over time. Because of course, in an open-ended vehicle, the income that comes in will be paid out, whereas with an investment trust, the board can choose how much of the income that's received is paid out in any 1 year, and anything that's not paid out can be retained, and that's of huge importance a year such as the one we're in at the moment, where dividends have been the first thing to be taken out by companies. And so in the second quarter of this year, so not for the full year, but just in the second quarter, when we were at that really peak period of shutdown, dividends for the FTSE All Share were cut, well over 50%. I think it was around 75% in the second quarter. For the investment trust specifically, the board of Mercantile have already come out and said that they will aim to at least maintain last year's dividend. So shareholders really do get that extra security. And it's in the position that it can do that because we've kept some income in reserves from the previous years. So in the lean years, we can draw upon that income in order to generate a consistent income growth profile. And in fact, Mercantile has grown its dividend at an 8.5% annual growth rate over the last 30 years, which I think does demonstrate the board's attention to that point and the importance of growing that income stream.
And it's worth mentioning, isn't it, that revenue reserve mechanism is not something that's available to open-ended funds, is it?
No, that's correct. That's correct. It's an investment trust advantage.
So with smaller and medium-sized companies, obviously they're generally more domestically exposed than the big FTSE 100 stocks. What implications does Brexit have for the portfolio in that respect?
So that's clearly something we've been monitoring for longer than I thought I would need to monitor it. So it's been a topic of conversation, obviously, for what's approaching 5 years now. One of the key things that we look at is, of course, the exchange rate and how the portfolio on a look-through basis is exposed to the different currencies. Because as we've seen through various times in the past, if there is a sudden shock in one way, in either direction, quite frankly, the currency is often the first thing that takes the strain or sees the benefit. And so if we look at the portfolio today on a look-through basis, about 57% of the revenue is sourced domestically versus 43% internationally. And that compares with the benchmark, which is roughly 50-50 between the two. But then, of course, compared to the FTSE 100, the FTSE 100 is very international in its nature and only generates around 25% of its revenue domestically. So clearly, our portfolio has a domestic tilt towards it, which of course means we're keeping a very close eye on those Brexit negotiations to see how we ultimately come out of this situation.
And I suppose partly because of Brexit, the UK market is a bit of a pariah at the moment, isn't it? And it's trading at a significant discount in terms of valuation to many of the other developed markets. Do you see the potential for the UK to return to investors' favour anytime soon, do you think?
Sure. I mean, I'm obviously going to be biased because I'm a UK fund manager, but you're right. When we look at any of the sentiment surveys, the UK has consistently been at or close to the bottom of the league tables for over 4.5 years now. And indeed, allocations into the UK from international investors have come down through that time. So there is a significant underweight to the UK market, and the valuation is looking compelling. The valuation is at around a 20% discount to the European market, and they usually trade roughly in line, given they have similar characteristics in terms of the returns and growth profiles. And so I do think there is an opportunity there. Having had one or two false dawns over the last few years, I would imagine that international investors will really be in wait and see mode, i.e. they will be waiting until after there is certainty, as opposed to being willing to preempt it. And so I think it will be interesting once we have finally got through Brexit at the end of this year, and then hopefully once some of the vaccine implications potentially begin to feed through to the economy, I think that could be a very interesting time for the UK market.
And with all that in mind, the largest M&A deal so far of 2020 has been S&P Global's acquisition of London-based IHS Markit. Do you think that the climate in the UK is ripe for a potential M&A shopping spree?
So it's a good question, and of course I'm not going to have huge insight relative to anyone else on this. But what I would say is, typically the UK has seen quite a lot of incoming M&A over history. If we look back over the last 20 or 30 years, on average for the mid-cap market, as an example, 6% of the index has been taken over every single year on average through that period, versus around 2% for the FTSE 100. So it is a greater phenomenon as you move down into the smaller companies, of course, which makes sense. There are a larger number of potential buyers, etc. But the UK is attractive because of a number of things, not least because of the rule of law here, and of course the openness of our stock market to international investors and acquirers. It has been quiet on that front in the last couple of years, and I would put some of that, of course, down to the wider economic uncertainty. But of course, the additional uncertainty posed by Brexit will have held things back a little bit as well. So I think having clarity and certainty on the outcome will certainly release some of that caution, particularly if we're looking into a recovering economic environment as well.
Just to finish up then, Guy, just summarise the attractions of Mercantile Investment Trust and why investors should go out there and take a look.
Sure. So for me, the first and most important reason to take a look is the returns track record. So mid and small cap companies have tended to outperform the overall market, and there are numerous studies as to why that is. Essentially, superior growth. And if we look back over the last 60 years, it's been the case in 2 years out of 3, and cumulatively that has compounded quite considerably. Mercantile, I believe, is a great vehicle for getting exposure to that, as we cover both the mid and the small cap part of the market with a dedicated team of investors. So we really do have the bandwidth and the ability to cover what is quite a broad ranging market, and that has indeed converted into good returns over the long term. And then, of course, as we mentioned, I think the income profile and the the additional benefits of the investment trust structure give greater certainty over the income profile, and that is indeed, I think, an added benefit as well.
Anderson, thank you very much.
Great, thank you.
And don't forget that you can learn more about the Mercantile Investment Trust at the J.P.Morgan exhibition booth, so do go and check that out. Thanks for watching, everybody.